our great team, Ted and Logan. Today, we will be discussing the semiconductor industry that has been a lot in the news. But why don't I turn it to Ted, and we will show the bio, and then we'll get going with the topic.
Great.
All right. Well, good morning, good evening, good afternoon, everybody. As we usually say, I'm really happy to be joined by my colleague, Logan Bender. Logan, how are you?
I'm well, thank you. It's nice to see our colleagues from around the world. And here we are again for another lecture, working on semis today, fascinating industry, and in the
It's
news, as
not an
Jakob said.
important, it's really not an important industry, Logan.
Yeah,
I don't
it's
know
kind
why
of a
we,
cottage industry niche, if you will.
um, so yeah, no, Logan, why do you think it is such an important industry at this point?
It's become ubiquitous. I mean, we have everything powers is powered by semiconductors in some way. I mean, you think about the fact that we carry the history of the human word on tiny machines in our pocket are all enabled by these chips, these semiconductor chips. And not just with the AI boom, but for decades, this industry's been building. It's in the news more now. We have more semiconductor content in cars, in electronics, and everything that's around us that powers our lives, our digital lives, and it's in manufacturing. It's everywhere. So the ubiquity of the semis industry, it is. There's a lot of opacity. It's opaque. The reason why is because it's so complicated. It's so complex. So we're going to break it down. We're going to go into different parts of the value chain. Where is the value captured? Is it transferred to the consumer ultimately? Is it captured by the people that manufacture the chips, such as the foundries, or is it on the leading edge GPU and IP designers, et cetera? So we're going to break open all that. We're going to talk about industry dynamics. It should be good. So take notes. And back to you, Ted. Let's get started.
Yeah, so if we go to the next slide, this is who we are. Many of you who are joining were participants in the class that Logan and I taught for 5 years and Jakob supported so effectively, uh, economics of high-tech industries. And what we're trying to do is reach out to people who took the course, Yale SOM alumni, Yale SOM students, people from GNAM, the Global Network for Advanced Management. And then, of course, we want to say thanks at the outset to Yale Center Beijing, because most of our participants tune in through the Yale Center Beijing WeChat. Is that correct, Jakob?
That is correct.
Okay. So, and for those of you who are interested in uh, updates from Logan and myself, check out the website. For those of you who would like to get a copy of the slides after the presentation, we'll post those on the website. And one thing that I do want to mention, Logan captured really why we're doing this and what we're doing. Some of the results that you're going to see today haven't been presented anywhere before, and they are preliminary based on some data analysis. And I wanted to give a shout out to another member of our team, Harshit Agrawal, who has been working on collecting information about the market caps of various firms in the semiconductor industry. All right, well, let's go to the next one. So here are the questions, and demand, supply, that's one and two. Who are the leading edge at each stage? As Logan mentioned, which firms are capturing the most value? You might say, oh, it must be the rare earth suppliers, right? They're the ones that are in the news. Well, that's not what we find. Um, why do some firms succeed and others struggle? And then related to that, do firms with high market shares have market power the way people normally think about it? So some quick background on the industry, and Logan, I'll ask you your view on this, but actually, it's interesting. The industry has been around a very long time. If you go back to 1958, that's when Texas Instruments first integrated multiple electronic components on a single silicon chip. And prior to that, the IBM, for example, had already developed the mainframe computer. So this was this was an industry that uh, had a role, a presence for many, many decades. But Logan, I don't know if you would agree, but I think the industry developed relatively slowly until the last couple decades. And then it became what you call an apex technology. But do you agree with that?
Do. I mean, with the rise of computers in terms of a computer in every household, that was one major inflection point. Obviously, internet adoption drove business models that we couldn't even conceive of. But, we get wrapped up in how enabled we are in the digital world. But if we step back and we think to ourselves, okay, at the end of the day, a chip that's smaller than our fingernail could easily exceed the output and productivity of 10,000 people. What they would be able to achieve in a year, this tiny chip can achieve in mere seconds. And so the raw gain in productivity is unprecedented. And so there's going to be more of it. And obviously, more firms are going to throw their hat in and compete in this industry. And then you have these waves of innovation, such as what AI has done. AI has also been around since the 70s and even the 60s. They were playing with different ideas about some general intelligence. But fast forward to today, we have AI has been democratized. It's been applied to almost every industry, and it's increasing the addressable market and increasing the capabilities of many firms. And so those are powered by semiconductor chips, particularly GPUs, with NVIDIA and AMD as the leaders in that industry. And so we've seen this slow emergence of semis, and then you have these dramatic inflection points, which is really exciting to see. So that's what we'll talk about today, Ted.
Yeah, so the thing that I would highlight along with what Logan highlighted, which is the amazing increase in productivity. I mean, the chips have, with Moore's law, have become more and more powerful. Um, it's also, I think, worthwhile, and Logan, you mentioned the internet, to think about what complementary things have happened, complementary advances in technology. And as Logan mentioned, the internet. Another very big one is the ability to communicate through various technologies. Now we're adding satellites, but that means that the communications abilities of uh, devices and things and people who have access to powerful uh, semis means that they can communicate with each other and send information to each other. And probably if we go back to the history of telecommunications, the move from 2G to 3G and then 4G was a major complement to what semiconductors could do in smart devices. You could communicate through the modem chips, which end up being really an important type of chip. And now we're all connected. Things are connected, the Internet of Things. So I think it's a combination of phenomenal increase in productivity as well as the development of complementary technologies. All right, next slide. Oh, wait a minute. No, I think that's right. I mean, obviously, semis are really an important component of the China-US rivalry. But let's turn to demand. And when I see a chart like this, I always try to ask questions. Okay, government, 1%? That can't be right. So this is the typical thing that Logan and I do. We see data and we try to go deeper. This can't be right that one demand is only 1%. Government must be on the receiving end of a lot of the other demand. So there's a sequence of demand here. Another question I have is where's AI on this chart? And Logan, maybe I think you have an answer to that.
Well, yeah, I mean now it's everywhere. It's in all these slices that we see emergence of AI adoption in many of these companies. Now, one important question is also, okay, well, how applicative is it? For example, Schneider Electric, how applicative is AI to Schneider Electric building electric components relative to an Apple or a Huawei, or obviously Nvidia and AMD. And so it is you definitely want to when you listen to earnings calls, you talk to management teams, you'll kind of get a sense of how much traction they're getting. We'll look at that in capital expenditures and revenues that these firms, some of the firms, are generating from their bets on AI and from their initiatives on AI. But again, as ubiquitous, it's been infused in the ecosystem, and it has been coming for years. These many firms have been talking about AI for years, but in the last couple of years, we've really seen the inflection. And will it drive the next leg of growth in the tech space, Ted?
So if you look at automotive there and PC, computer, industrial, those are major drivers. If you go to the next slide, just a quick flash on they're everywhere. Automotives, PCs, industrial, etc. Let's go to the next. Well, actually, it's just pause there on cars. How many semis are in a car? Well, it's hard to know, but of course it varies. But a good starting point would be for a new EV would be around 3,000 semiconductors. Let's go to the next slide. Logan, this is a phenomenon that maybe you could break down, but on the left-hand side of the vertical axis on this graph is the percentage of revenues, and what's being depicted is what percentage of revenues are being spent by major US tech companies. And it may be a bit of an eye test there, but it's a huge percentage. So Logan, maybe you could put this into historical context.
Yeah, we've been tracking this for a couple of years, but about 18 months ago or so, and on the next slide we can see as well. Let's stick with this one for now. We saw heavy investment in data center, but well above and beyond, head and shoulders beyond what we've seen before. The striking thing was that we saw it subsequently every quarter. They spent more, and these are leading companies. Obviously, they employ some of the most brilliant minds in the world. These are what we call the hyperscalers, or the big cloud giants. You have Meta, Microsoft, Google, Amazon. There's some others as well that are spending almost on the level. But it's not just the scale of investment, but it's the velocity of investment, that they're spending more and more and more every quarter into the hundreds of billions of dollars without stopping, without pause, which tells you that these operating teams, these executive teams at some of the largest companies on earth, are making a huge bet and taking tremendous operational firepower and putting it towards the idea that the data centers and AI are going to power the future, and they can't miss out. One point, as an analyst, I was a semiconductor analyst. I was an analyst that covering global technology stocks from China all the way to Europe to US. And when I look at a chart like this, and the reason why we put this chart in some of our decks is some companies you see they seem to spend defensively, meaning that there's an inflection in the industry. They feel like they have to get behind it. Maybe they feel like they're behind, so they spend to catch up. Whereas other companies may spend proactively, making an operational bet saying, hey, listen, we're going to go out and achieve this growth initiative and not try to chase the market. And so I think different firms in the subset, for example, Amazon, they have their AWS ecosystem. They have a phenomenal ecosystem. It's very sticky, meaning it's very difficult for users to leave. The company that I am with now, we have Amazon, we have AWS. It would be very difficult for us to transition to another cloud or have dual cloud. And so Amazon has a captive audience they can sell incremental product into. This has really driven growth. And so I think they're spending proactively. Whereas Meta, some would argue, is chasing. They're saying, okay, our advertising business, maybe it isn't so good anymore. And so we're going to invest really heavily in a defensive way to try to catch up to the market or establish some kind of foothold to cement ourselves as a leader in artificial intelligence. And you can see it reflected in how much they're spending. And imagine a firm as big as Meta spending $4 of every 10 that it makes for advancing these technologies and these initiatives. It's amazing, and I've never seen anything like it. And it's historic amount of spend, Ted.
So three things, if I can remember these three things so early in the morning. One is Obviously, here we're focusing on U.S. firms, but we could show an analogous set of data on Chinese firms. Chinese firms are Tencent, Alibaba, Baidu are doing the same thing. But here we have data on the US. But this is a phenomenon. I think it's mainly the US and China. Second point is, as Logan mentioned, um, the velocity and the implications of that. So now we look at this chart and we say, oh my gosh, look at the percentage of revenues being spent. It used to be that these investments were funded internally, but when you get to 40% of investments by these firms, they're placing huge capital structure bets on AI. And I think we both agree this is really changing the nature of competition among these hyperscalers. It's a kind of bet that to me is so large, I can't believe that all of these firms are going to win. Um, and as Logan pointed out, and this is the third point, these are not sort of just homogeneous investments. The firms have different strategies, they have different complementary resources. Meta may be more defensive. Amazon is in a position where they have the complementary customer base, AWS, cloud computing, et cetera, where their bets have if you will, more of a natural work playground to which they can apply these investments and look for returns. So let's shift from percentage investments to absolute. And this chart, again, it's just, you know, it's a subset of the major US companies, but these dollar amounts are, I think, in my experience, historic. I don't know what comments you would offer about these, but look at those dollar amounts. And this is just, if I recall, this is just for a particular quarter.
Yeah, this is quarterly and $52 billion. I mean, just that amount of money alone in absolute terms exceeds the value of what, one third of the S&P 500 in terms of companies that are below the $50 billion in market cap. I mean, it's incredible.
They can't be making enough money right now to justify these investments.
That's right.
This
So
is
that's
why
the
we call
risk.
them bets.
Yes, that yeah.
Okay, and then it's next slide. It's not obviously just the firms that we saw before, or even the Mag 7 in the US. Recent example is Oracle this week. Their stock popped because of their investments in so-called intelligent agents. And it's interesting. We had put on the website our list of potentially top 10 kind of success stories in AI, and we included Oracle. So we could say, good to us. We saw Oracle outside the Mag 7, and right before this webinar, we get this event. Um, I'm 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 a little though suspicious of this jump. Um, I'm hearing that these contracts actually are not very well distributed across a large number of companies seeking Oracle's software and technology, and instead it's concentrated in contracts with OpenAI. And whenever you see something like that, I think you should question, well, how solid is that? What happens if OpenAI can't meet the terms of the contract? But obviously, it means something. I just don't think it. What my guess is, I'd be suspicious of the 40% jump. Um, but yeah, and then of course, outside of the U.S., Logan, maybe you could comment on that. We don't have access to data like this. The Wall Street Journal is a great source on U.S. companies, but not so much of for Chinese companies. But Logan, we have every reason to believe that Chinese companies are doing the same thing.
Oh, yes. I mean, they're spending, they have been spending. The Chinese companies that are leaders in the space, and even, e-commerce or a diverse company conglomerate like Alibaba, they have a phenomenal cloud business. I rely on my former colleagues in Hong Kong that cover these from the investment banks to catch up. And when Ted mentioned Oracle here, this is part of our class and our program. We bring in current events that are the latest market news that relate directly to the themes that we're covering. And we'll unpack that and our views on that in real time. And so we try to enable the students or our audience who are speaking to, such as this morning, what does the Oracle move mean for Oracle? What does it mean for the competition or the people that are competing with Oracle? And what does that mean for the ecosystem and its future impact? Oracle had the largest earnings quarter since I think the early 1990s, I think 1992. Part of that probably was short covering, but that aside, Oracle now shows tremendous promise. Are they going to be a leader? Are they going to be as competitive as some of the giants that we saw before? We've seen, and Ted, maybe you want to comment on this before we move on, lane convergence of Google used to do search. Facebook used to sell advertisements. Meta used to sell advertisements. All of us, Xiaomi came out as a cell phone maker. Now Xiaomi does automotive. Meta does data center and other applications. Oracle's doing cloud agents to the tune of hundreds of billions of dollars. We've seen convergence and competition, hundreds of billions of dollars of spend. What an interesting time to watch these companies compete and what their agendas are.
Yeah, I think I don't have anything to add. I think this is a really fascinating time when we're going to see divergence in strategies and success rates across these firms. Let's go to the supply side, the next slide. And if you look at this chart, and I'll let people digest it a little bit, but I direct your attention to number one on the left-hand side, raw materials. And then right below that are end purchasers. So, and when we mean, what do we mean by end purchasers? We basically mean buyers of finished semiconductors. And NVIDIA doesn't make them, so they are actually a buyer. But Tesla buys finished semiconductors, uh, Tencent does, Microsoft, Samsung, etc. But what this chart is intended to tell us is that there are a lot of stages of production between the initial stage of raw materials and the final purchasers number nine. And they include the wafer production, which is I actually visited an Intel foundry a long time ago, and I saw the wafer production. That's sort of the disks that are developed and then imprinted on those are the designs that generate actually yield semiconductors. But we've got design, we've got equipment. Number five is a very important step. That's the actual production of the chips themselves. And then there are steps involved in uh, manufacturing and assembly and testing before they get to the end purchasers. So we have a complicated supply chain. Just,
Mhm.
that's point number one. Let's go to the next slide. And what we've tried to do, and this is highly subjective, everybody, we acknowledge this, but we've tried to identify some leading firms on the supply side. And we've also conducted case studies on how these individual firms are doing. But here are leading firms at the raw material stage. Some of these names you recognize. And then on the design stage, ARM and Synopsys and Qualcomm, et cetera. Let's go to our subjective identification of leading firms at each stage. This is the same chart populated by what we would just call out as the top supplier at each stage of production. And again, subjective, but raw materials, Shin-Etsu, wafer production, we've got Global Wafers, design, we've got Qualcomm equipment, ASML. Um, by the way, we'll come back to ASML, but then that key foundry step, TSMC, end purchasers, companies like NVIDIA. But ASML is really an important step. Logan, do you want to say anything about ASML?
Really briefly, so these are the companies such as ASML. There's not very many of them. They do what's called lithography, meaning they make the machines that make the chips. They etch the chips with lasers. So you have a mask, and they shoot lasers through the mask, and they create the chip designs. And so these are very expensive machines, hundreds of millions of dollars for one unit, and it's highly specialized. The IP is tremendous that goes into this. And so the ASML, it's a very important company. So some of the value is bottlenecked into ASML and a couple of other competitors, ASML being the leading one, Ted.
And probably the only major firm outside US or China. I'm probably going to regret that statement, but uh, they really are unique. All right. So what on the supply side, what would we say are the most important things you should know about the supply? Obviously, we've already established that there are multiple stages. Each stage involves a lot of lags in terms of the development of new products and new processes. A lot of the firms are specialized. It's hard to be good at each of these stages. And another observation, which I think is important not only for today, but our likely next topic for our next webinar, the top firms are not located in the same country. So think of TSMC and Qualcomm. TSMC is in Taiwan, Qualcomm is in the US. Well, that's going to complicate the supply curve. And then one more point, which is it's global, but not only is it global, there's a mismatch between the producing and consuming countries, and that's illustrated on the next slide. Hard to read, but producing is the bar, the blue bar, and consuming is the orange bar. And you can see how the bars for individual countries and regions don't match up. So countries are net purchasers or net suppliers along the way.
And I'll just tack on that TSMC, headquartered in Taiwan, is the biggest fab in the world that produces the most. Most of us know this, but it's tremendously important for the entire ecosystem of semis. And we'll see in terms of value capture. So let's remember value capture. Which firms are capturing the value in this inflection, in this era of semiconductor and AI inflection? Who's capturing the value? Think about that as we go through these slides. Taiwan is tremendously important because they have the biggest foundries, the biggest fabs in the world, Ted.
Yeah, so okay, so given that the supply chains are complicated and global and firms specialize, a question arises, well, how do firms actually interact with each other? What is the nature of their transactions? And for those of you who are alumni of 960, you've seen this chart before, but in different market settings, you have a range of ways that firms transact with each other. And in the left-hand part of this continuum, there's the dark blue bar that says spot market. Well, the spot market for semiconductors is pretty much irrelevant. There's too much specific investment, uh, uh, and the processes are long, the lead times are long, there's co-development. So what happens is firms, when they do enter into potential transactions, they focus more on contracts and sometimes exclusive contracts, the right-hand side of this continuum is much more important than the left side. So firms choose between partial vertical integration, long-term contracts, single source contracts that have durations. So that's where the action is. And I think it's important to mention that because that sets up how the answer to the question, well, given that that's how firms contract, that's also how firms win and lose. Okay, I'm trying to monitor some of these interesting questions. We'll try to get to these later. Okay, given the how firms contract, we wanted to get into the question of which firms at what stages of production, again, which firms at which stages of production are capturing the largest percentage increases in their market cap. And the time period we selected is 2015 to 2025. And this is based on our subjective selection of leading firms with the caveat that for the analysis to proceed, these have to be publicly traded. So, so for those reasons, I would say these are preliminary results. But here are the change. Logan, when we look at which ones pop, I mean, what are your comments on these increases in market cap by stage?
I'm not so surprised by these gains in these various stages. And my comment would be that when you look at everything from rare earths, raw materials, all the way to the IP designers or some like an NVIDIA, which designs GPUs, they do not manufacture in-house, they contract that out, but they're the designers. When you go further towards the edge of the leading technology, of the bleeding edge or the leading edge, however you want to put it, you seem to see the most value transfer, the most value capture towards the leading edge of that tech stack. That's expressed again here. You have the most gains in the IP heavy companies such as NVIDIA. NVIDIA is up several thousand% in the last several years. And it's surprising how much they've gained, but it's not surprising that they've had a huge spike in their stock price and their valuation. Ted and I in our class go into valuation in great detail, how it relates to both public and private markets. For this chart specifically, it doesn't surprise me that it's farther towards the higher end of the tech stack that we see the value capture.
So you mentioned NVIDIA. NVIDIA is one of the end purchasers. So that's a
Yes.
big driver in that historic increase. Are you surprised, Logan, by raw materials being on the low end of the increase?
Not as much because there's not as much IP that's involved in that. I'm not saying that the machines that mine the rare earths are not sophisticated or the supply chains and logistics are not sophisticated by any means. But as you have more specialization in human capital, labor, research scientists, et cetera, you're going to tend to see, at least in high tech, you're going to tend to see more value capture there. Let's relate this to one really important question, though. And I posed this earlier on. When you think about a technology such as AI powered by semiconductors, is it ultimately the consumer? Do I, with my chat GPT and my tools to augment my job as what I do every day and in my personal time, do I yield more gain than an NVIDIA or an OpenAI? Is OpenAI giving away so much value to me that I, the consumer, may ultimately, one could argue that I yield more value over time? And so, does the value transfer? An analogy that's maybe a little bit clumsy, but I use is over time with food production gains, you've seen the calorie value transfer towards the consumer and not necessarily towards the manufacturer. Many food manufacturers are low margin businesses. in technology, are we going to see with the democratization of these interesting technologies, are we going to see that value ultimately transfer towards the consumer, or will it be towards the firm, or will it be some other part of the industry, Ted?
So I agree, Logan. Now, these are not weighted by value. So we're just focusing on the percentages. But again, raw materials, modest increase compared to the others. That's not what you would expect if you just read the news about how raw materials are being used as leverage, et cetera. But Logan's mega point is right, especially if you look at the weight this by the amount of market cap at the end purchaser stage. That's where, very simply, that's where most of the value is being captured, because that 652% is weighted by massive market caps for the firms in that at that juncture in the stage of production. And then Logan is right. Well, then how much of that is then being transferred to end users, consumers? So end purchasers are at the interface between chips and products that we use. And that's the next stage of analysis, but we're getting at least to that stage. Let's go to the next slide. And this is an example, and this is suggestive of the proposition that even for Apple, we've got this interesting situation where maybe they have, for their low-end phones, maybe they have $150 worth of semiconductors. They are able to complement that with other features in the iPhone and sell that iPhone for 700 plus. So this is a case where I think we would say we see the value being captured by end purchasers. If you're the leading supplier of individual components here, you're not charging so much to capture a bigger share of the final price. I know we've got a lot of interesting questions. Let's see if we can cover a few more things, and then we'll open it up to questions. Individual firms that are capturing the most value. If you just focus on the left-hand side, those names are ranked by market cap, with Intel and Samsung being the highest at 163 billion, and a company like SK Hynix at 18. Well, the change in the rankings is dramatic. Firms that were big market cap back 10 years ago, it's not necessarily going to carry forward 10 years later. And you've got a really interesting phenomenon with Qualcomm doing well, TSMC that Logan mentioned, Intel falling way off. So as they say on the information disclosures, past success is not a predictor of future success. And if we go to the next slide, we've just got some of those names highlighted. TSMC, a 9-fold increase in value. Now, why is that? What's going on? What explains these divergences? And we've identified 3 hypotheses for that. One is compete and win. This is a highly rivalrous industry. Firms compete continuously, and they can win and they can lose. And they compete on the development of new products. For those of you who likes, global football, it's a game where the players have to anticipate where the ball is going and how to position themselves and how to react to that. It's extraordinarily dynamic. And then, so for some firms are better than that than others. Some firms have good foresight. Some firms may have good foresight, but then they're unlucky and things don't develop the way they expected. And then the second hypothesis is firms that get ahead stay ahead because of so-called competitive moats. And the third hypothesis is, well, the firms with high market shares must be doing something bad. And if we go to the next slide, when we look at the case studies so far, for example, dial in on memory chips and look at what's happened to Samsung versus SK Hynix and Micron. And when we look at foundries, then we can look at what's happened to TSMC versus Intel. When we look at the success of ASML, we strongly favor hypothesis one. Hypothesis one, if the moats were so big, we would see persistence and the incumbents who have strong value persisting, but we don't see that. So we're not saying that incumbents don't have some advantages, but the nature of competition generates a lot of winners and losers. And who are the winners 10 years from now probably will be different from the ones who are winning now.
That's important. Yes.
All right, Logan, I'm talking too much, but do we need to go through this? I mean, a little bit, maybe the steps in reaching a
Let's
contract?
breeze through this. We have a few more slides to cover, and we'll still do a Q&A. So I think let's give this a little bit of attention and then and keep our momentum up. There's some important points to cover ahead.
Yeah, I mean, just, the key point here, everybody who's tuning in is these contract processes have multiple stages and they're long, okay? And when that's all done, they have a duration, and then the whole process starts again with renewal. So if we go to the next slide, I've asked myself the question, well, okay, compete and win. Where is it that firms can win or fail? And it's multiple stages: qualification, bidding stage, the collaboration between customer and supplier is really important. Each side is making specific investments and getting ready for new products. That may go well, it may not go well. And then a supplier who's hoping to get a single source contract may fail at that. And even if they do, they may fail at execution, which means production and delivery. So there are a lot of points where firms can do better and do not so well. Next slide. So I mentioned this, incumbency, we believe, has advantages. For those of you who took the class, I mean, we emphasized learning by doing, switching costs, the role of IP. So all of those things are advantages for incumbents, but the key point here is number 4. Incumbency does not guarantee future success. I mean, Apple changed suppliers for their modem chips several times. Samsung lost their edge with memory chips. Intel was, such an important iconic firm with foundries, and they've lost their edge to TSMC. So do we think incumbency has some advantages? Sure, but not far from a guarantee of success.
And Ted, just to tack on to this point and what you were mentioning earlier about the leaders of the future 10 years from now, likely not the leaders today. An example we use is if you look at the market cap of the top 20 tech names in the dot-com era versus, say, 2010 versus even 2015 and 2025 now, you'll see a lot of different names that have come to the fore and have faded. And so tech moves with tremendous velocity, unlike some other industries that are maybe more legacy. And one of the reasons why it's so fascinating to us is that we see these huge changes in valuation, and which is why Ted goes into it's not a guarantee of future success. Just because you're there and you feel like your firm is at the top has no bearing on 20 years from now you still being the leader in your respective space because of the adoption cycles, the innovation, the pace of innovation, and how much investment. Let's not forget this. industry, this broadly in TMT, not just semis, but broadly in technology, consumes more investment than almost anything else on earth. And so you have a tremendous interest from all governments and countries and firms, et cetera, pushing these innovations forward into the marketplace, Ted.
So perfect comments there. Let's cover two more slides and then we'll turn to questions. Given what Logan said, one of the questions we posed at the outset was, well, what do market shares mean? And first of all, they're snapshots in time. Another thing to obviously recognize is that they basically aggregate successes in gaining individual contracts. All right. And given what we said earlier, they're sensitive to changes in so-called ex ante before the contracts are written competition. I think of these market shares as outcomes of rivalry. Which firms won, which firms lost. It's that simple. They're outcomes at any point in time. And then when we see sustained high market shares, that's going to be due to several things. Continued success with winning the contracts, successful execution. There's a lot of foresight. Where are the new products going? And do you invest properly in capabilities to supply those new products? So I and Logan, I think we would summarize this on the next slide, which is firms that win have foresight, they make good investment decisions, and they execute. And when you're analyzing firms and you're saying, well, how are they doing? You want to look at their market shares, right? But you also want to realize, given the dynamics of this industry, you want to look at, well, what are they saying about the future? Are they getting that right? Are they making the right bets? Are they making the right investments and capabilities? And are they going to be able to execute? So this is a phrase that actually has been around in the management literature for decades, but we don't, we think it's probably should resurface, and it's a good way to capture it's a framework for analyzing how individual companies are doing. And with that, I think let's pause.
Great. We have a lot of questions coming. So I think I'll moderate and I'll post them. Well, first to you, Ted. Logan, you have answered in the chat. Please keep text typing them in the chat and I'll get to as much as we can. Let's start with Jerry, our 960 alumni. Ted, what do you see as the most realistic long-term strategy for the US to secure its chip supply? And I would extend the question, what about other countries, given that the supply chain is truly global and no one country is perhaps can be independent?
Oh gosh, what a good question. And it's exactly the right question given what we said about the complex global supply chains, the mismatch between production and consumption, the specialization of firms, and the divergence between consumption and production. We're so far away from a world where individual countries have all of the steps inside their boundaries. So that's the key question, given the stakes for countries, especially the two that are highly rivalrous right now, and that's China and US. And this topic is probably, our next webinar, but I don't see a end game, an equilibrium where we get to individual countries or individual major regions like the EU, China, US, having their own supply chains. It's a very simple statement, but I think it's worth making. And if we don't have that, then we're going to each country or region is going to end up being reliant on other specialized firms. And I think that's what China and US are struggling with. And the actions by the Trump administration are fascinating right now. Are we really going to get changes in those supply chains? And I don't want to say I'm dubious, but I would recognize that's going to take a long time. So meanwhile, we have to muddle through a period where we're going to have continued interdependence, including between China and the US.
Okay, question from Mark. How secure is ASML's position with EUV lithography? What's the likelihood that a new technology could disrupt it? In other words, how wide is ASML's effective moat?
Logan, why don't you take this one?
I'll field that one. So ASML, obviously one of the leading firms, and EUV is one of the most, how should I put it? One of the most, they build some of the most complicated machines on Earth. Imagine the most complicated and complex machine human beings have ever built. That would be your EUV machine by ASML. ASML is constantly hunting for disruptive technologies. They're building them in-house, et cetera. So they're active. They have a corporate development team that's looking at investing in novel technologies and teams that are trying to disrupt ASML so they would own part of that future. Let's take another approach to that analysis and say, even if there was a novel technology that could be a multiple of productivity gain or much cheaper to produce the same amount of units, is it scalable? We see this in memory. We see this in battery technology. We see this in like Google's TPU, their TPU versus GPU. So we see other parts of the tech industry that has things like better memory density, better battery density, et cetera, but you can't scale it very easily. Or if you could scale it, it's so operationally expensive to scale, it doesn't make sense to do it, at least in the current environment with the current conditions and the current players. And so that's one of the bottlenecks to, I guess, all of us in moving the industry forward is that it's difficult to scale these technologies that are so complicated. And that's what I would pose. And if you actually look at China is a great example of the investment portfolios that some of the leading firms have in China. They have hundreds, if not thousands, of investments in all these different startups and companies to discover and to espouse technologies that could potentially disrupt their core line of business.
So to this question, our research shows that ASML has something in the order of 20,000 patents. So going to the question about the width of the moat, that's one factor that widens that moat. And another interesting thing is, given that ASML has such a strong position at this stage of production, why aren't they charging even more? And I think the answer is they want to make sure that they remain in that position for the long haul. And if they charge too much, they would force other firms to co-invest in the development of alternative technologies, not necessarily to penetrate that moat, but to do something that's different. That's my intuition. I may be wrong on that, but a great question.
Okay, now we have a Ted. Speaking of global tensions, a great question from Tiru. Do you believe China is going to successfully build its supply chain? What's the meaning of technology sanctions and export controls to China, which both hurt China's economy and the development of its technology?
Well, this is going to be, I think this is our next webinar, and my thoughts aren't yet close to final. But if the US continues to try to hold on to leading edge chips, it's an odd strategy in the sense that it's not an infant industry. We're not protecting the development of a U.S. industry. We're actually trying to deny the development in China. And whether that works or not depends on all kinds of things. How effective are the restrictions? How are they enforced? And just because a government says something doesn't mean it happens. And then the other big question, of course, is how will China and how is China responding? And can they develop on their own competing leading edge chips? And we saw what happened with the large language model example with DeepSeek, and whether this works to be determined. But Logan, do you have comments on that? Mine are preliminary.
Well, I mean, China still has no native CPU or no native GPU in the same way that US firms have, such as Intel, AMD, Nvidia, etc. So, how long will it take for China to catch up is the question. They have the human capital, certainly. They have the balance sheet, certainly. They have the government incentives. They have everything they need. They have a brilliant population, educated population. So, China will emerge eventually, but how much is eventually relative to the innovation cycles that we're seeing? That's really the question. It's not if China will stand up an industry. We also have to think about cost. How much would it cost for them to catch up? Is it worth it? Or is the entire ecosystem stable enough that they can keep buying from Taiwan? They can maintain and manage competition with the US. This will be part of our global tensions lecture, probably as well. Is how will they manage competition with the US, competitive interest, et cetera? So that's something to mind as well. Next.
Yeah.
Ted, would you like to add to anything to Mark, to a very related question from Mark? How likely is it that Chinese firms such as Huawei, Baidu, Alibaba will succeed in developing their own competitive semiconductor technologies? And let's keep in mind, these companies have also spending tens and tens of billions of dollars for R&D.
I agree with the premise. That's what's happening. It's hard to understand what progress they're making. It's hard to observe that right now. But I would go back to what Logan said. The amount of human capital in China and inside some of these firms, as well as in the government, is staggering.
Agree.
Just add up the number of uh, highly trained PhDs in China, the different types of engineers. They have that. Um, I don't know. The short answer is I don't know about these leading firms, how well they're doing. I would comment that I think it's a really interesting question. Um, to the extent that this is done by government within the government sector in China, how will they organize that effort? How are they organizing that effort? And how effective will government organization of the effort be compared to what is in the US, which is more market oriented? I don't want to say that the models are completely divergent. They're not. There's definitely overlap, a mix of private companies and government organization. But I think we're going to, I want to think more, but I think we're going to see this play out where it's also a competition between economic models. And I think that doesn't get enough attention right now.
Okay, let's shift a little bit to a different strand of questions. What's the reason that most market value was captured by semi-manufacturers over the past 10 years instead of purchasers like Nvidia? And I suspect, Ted, that you don't agree with the premise of the question.
Correct. I think that there is value being captured along the way, steps 1 through 8, but especially if you weight it by market cap, most of the value is captured by end users like Baidu, like Apple, Nvidia. And that means that basically there's enough competition at the earlier stages of production where you get you get that value getting moved along, passed along to the end purchasers.
Jakob, can we field the question from Peter on AMD investing? AMD is often overlooked, I think, relative to NVIDIA, but I think this is an interesting question from him.
Are you thinking how likely is AMD to catch up with NVIDIA?
Yeah, the question, I'll read it. I don't want to misquote Peter. Has AMD invested
Okay.
sufficiently in complementary technologies like software to address the broad markets as effectively as NVIDIA? I love this question. Peter, I don't know where you are in the world, but good for you. So when we look at NVIDIA, we also see a suite of software tools, programming languages known as CUDA. And so the CUDA architecture, CUDA programming languages have been infused in a generation of engineering talent and engineers all over the world. So if I'm walking into a job at a tech firm or something like this, and I'm familiar with the CUDA ecosystem and I'm not familiar with other languages, that may be very difficult for me to overcome that. And so you see a linguistic fluency that's emerged in the CUDA ecosystem that also, some would argue, is a competitive moat. Has AMD invested specifically in order to compete with that? I would say yes and no, not in the same way NVIDIA has. NVIDIA started that investment much longer ago. Let's not forget that AMD doesn't have to outcompete NVIDIA's top silicon. It can go with, there's the market's obviously huge, the demand is there. And so they can still produce CPU. They produce CPUs, by the way, and GPUs in order to effectively compete on a lower tier or certain workload specific. So there's plenty of upside. We've seen AMD's market cap rally tremendously, not as much as NVIDIA, but still appreciably so. I used to cover NVIDIA or AMD and NVIDIA. I'm near and dear to Lisa and management team. Actually, my former boss now works at AMD. But so AMD is a fantastic business. They've run a great company. But the CUDA question is what I wanted to highlight with NVIDIA. And Ted, we've discussed this in our class before. So the CUDA ecosystem is a fascinating part of the narrative in the GPU space.
So I have a comment and then a question for you, Logan. I agree on what you said about AMD, and I just wanted to note it's a real honor to have Lisa Su on the advisory board for the Yale Initiative on Managing Stakeholders, and she's just amazing. We're lucky to have her involved in the school.
It's great.
As to the question for you, you know, we just talked about the competition between AMD and NVIDIA. That's competition at the leading edge. And we don't want to forget that there's also competition from firms that are not on the leading edge. So pretty, strong competitors who are offering pretty good products at not the leading edge prices. And how important is that competition between leading edge firms and firms that are not quite leading edge, but have very strong products and services?
I think it pushes the teams at the leading edge to work diligently and focus their effort, but also turn around and buy those possible competitors. We're not going to get into the scope of industry concentration and HHI and all that today. But needless to say, and I brought up the example of ASML. NVIDIA has a marvelous corporate development team that are always looking at possibly disruptive technologies to invest and or buy them outright. I mean, we've seen a spree of investment in the AI field of the giants buying out these competitors. They're essentially buying engineering teams, buying LLMs, buying talent, et cetera, acqui-hiring, we call it. And so I think that's a big part of the story. You can't really separate uh, that from the M&A activity that's happened. And so I would say it's a tailwind to the industry ultimately in terms of the consumer. For us, we would get more value if they're constantly pushed. You have competitors nipping at the heels of the leading firms that enables them to go faster, in my view.
We just got another interesting question. As Intel seemed to fail to innovate in recent years, while with the CHIPS Act and other government initiatives trying to boost their competitiveness, how do you see that the company should address its recent backlash? How could Intel turn its business profitable with TSMC being so much ahead?
Great question. And a related one is, why did the Trump administration take 10% of Intel equity without really putting in anything? I think they counted investments that were the result of the CHIPS Act and said, well, we're putting in resources, so we're going to take 10%. I mean, the Intel story is fascinating. Iconic firm, um, number one in market cap 10 years ago, lost its way. I don't see, and they've had a succession of CEOs. I don't see the path forward for Intel. Logan, is there a reason to be hopeful about Intel?
I've published research ad nauseum about this, Ted, about Intel. I mean, Intel was hitting arguably their peak gross and operating margin years ago. They had done over $50 billion of M&A activity. Let's not forget the acquisitions of ADAS systems like Mobileye. They did some AI plays that were tremendously expensive. They missed the cell phone inflection. And they have struggled to achieve integration with the technologies that they've purchased, while at the same time they've optimized, or arguably they've optimized their core business. So their core business got as good as it could be in the eyes of analysts in the industry, while they failed to innovate and they failed to buy via inorganic growth enough to push that story forward. Intel has eroded since then, and is not really seen in the eyes of investors as a dominant or fast moving firm as it was in the past in terms of a future outlook. So Intel has struggled, and I think will continue to.
So in the time remaining, I just wanted to do a quick show of slide. I think it's number 29. It's the Jakob, the high
Yeah,
stakes for
29. Yeah, yeah.
yeah. So let's just show that and just say that's preface to the next webinar. But several really good questions came focusing on, countries. So actually go up one slide. Yeah, there we go. And these countries are, pursuing different strategies, and regions are doing the same. Um, I I understand why they're doing this, but again, we're not going to get to integrated supply chains within regions and individual countries. It's not going to happen. So, um, where should countries focus their industrial policies? Really interesting question. Let's sum up. We've got we've got we posed 6 questions, and Logan, do you want to take the first one? Just sum up the question and answer.
Demand driven. Going back to the comment we made about the ubiquity of semiconductors being everywhere, infused in all parts of our lives, all the machines we use, everything from my coffee maker to my car to go buy groceries. They're everywhere. They will continue to be everywhere, and they will continue to proliferate. You have huge markets. Let's not forget, not just EVs, but the future of automated driving. That's a massive change in how we live our lives. Clean energy, massive change in how we live our lives. And so if there's that, those markets are all massive and they apply to everybody really on Earth, especially the developed countries. And so we're going to see more of it. And so that's going to continue to fuel the demand. Narrowing down that comment, when we look at what's happening in the cloud with spending on the AI boom, we continue to see the CapEx increase. Will it fall off in 2026? My guess is it will, or it will start to decline a little bit after these companies have made these massive investments. I mean, Ted, there's been so much investment in data centers that we're running out of infrastructure and electricity in some of
Yeah.
these regions. Imagine it exceeding all the all the electrical usage of all the homes and all the businesses and everything else in government, and it's stripping all of that out. It shows you how much effort and capital is behind this, and so that's going to continue to push the market forward.
So turning to number two, I think the key word here, key phrase here is with respect to the supply chain, it's global, complicated, a lot of specialized firms, contracting over typically long periods of time using contracts. So complicated, there's some stickiness there, global. Who are the leading edge firms? Well, we gave our answers. We're probably wrong, but might as well put a stake in the ground. In terms of question four, which firms capture the most value? Our answer is the end purchasers. That still leaves unanswered. What's the division between the end purchasers, like Apple and Baidu, and their customers? And there you'd want to look at how competitive is that downstream market. Logan, you want to take number five?
1 second. Yes. Excuse me, my video cut out. So when we see, let's go back to, this is an important point. We didn't cover this. So when we talk about execution specifically, Jakob, jump back to number five, please. So you look at execution. So when NVIDIA comes out, I'll pick on NVIDIA for a second. When NVIDIA comes out with their newest chip, say their whatever processor they're developing, their GPU, if that does not meet qualification, then they have just destroyed billions of dollars of research and development. That does not work the same way that software does. You come out with a piece of software, it's got bugs, it crashes, it doesn't work, users are upset. We can fix that in real time with our engineers. We can re-engineer the code. We can put that out back in the market. We can patch it in a week or a day or whatever it is. We cannot do that with hardware. And so execution is really, really important. And the GPU makers or the hardware makers, they have to be certain that that chip meets qualification, because if it does not, they have lost an entire design cycle and they can lose their position in the industry. And so execution, in my view, for number five is absolutely central to success. Ted.
Yeah, great points, Logan. And then our answer to the market share question. If you have a high market share, does that equal market power? And given the history and the volatility in the rankings of top firms, the fact that these market shares are not oftentimes sustained, our answer is no, they don't have market power. It's what they're doing. When you see a big market share, I think you should, again, think of it as an outcome. And it's a bit of a snapshot in time, and it's subject to change. And the classic definition of market power is, well, you keep raising price. Well, even in the example of ASML, they have in mind that they can be replaced. We probably can't say how, but the same question would have been asked about leading firms 10 years ago, and many of them have lost their edge. So I think of high market shares as outcomes, and in many cases, transitory. All right, those are our questions and answers. How to keep in touch with us, how to give us comments. We really
Yeah,
appreciate your participation. It's good to see alumni from 960. Right now, I don't know how many people joined through the Yale Center Beijing channel, but my guess is it's huge. But let's make sure we get the
okay.
last slide up.
Okay. I have, for everybody's information, I've just shared a link to our LinkedIn group on LinkedIn and to our website, which I've also shown on this slide. And we post information about every future webinars on both of these channels.
Yeah, thank you, Jakob, for navigation. Thank you for all the help from Yale Center Beijing and colleagues around Yale SOM and GNAM. We will post these slides, and we had a lot of them in an appendix form, and we'll post those on the website. And wish you all the best until we meet again.
Thank you all.
Yeah,
Thank you, Carol
thanks
and
from me.
Beijing team. Thank you, Jakob. Thank you, Ted. We'll see you next time. Bye bye.
Thanks everybody for great questions. Thanks, Ted. Thanks, Logan. And thanks to ICB.